And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and making money doing all those things, or at least attempting to. Let's see. Let's go into the risk disclaimer screen since we're talking about money, and I need to cover my bases. First, this channel is for educational and entertainment purposes only and does not constitute financial or trading advice, or trading or financial advice, either one. I'm a professional trader, not a broker. Trading my own capital, I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And then the CFTC risk disclosure goes something like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So what that means is that this is not a buy and hold type of place. If you're a buy and hold type of investor, please look somewhere else to place your money, because you'll lose it if you buy and hold in Forex. Let's see. So with that, let's go ahead and get into our first topic of discussion today. Our first topic of kind of thinking things through, as this also serves as my trading journal, more so than any advice for anybody else. More so just for me, so I can figure out what I'm going to be doing with my trading. All right. Let's see. So let's see what got going on this morning in the DXY. The DXY is way up there. I've been watching a video today. I'm going to keep the videos in the end note, but I'll put the video up there from James Stanley from Forex.com, from my friends at Forex.com. My live accounts are at Forex.com, so I do have a couple of live trading accounts at Forex.com, so I'm highly recommend Forex.com if you're in the United States and you want to trade. They're good guys. They'll take care of you with a lot of support, a lot of commentary too. I came across them when they were at where was it? I guess it was NeelyFX. And then NeelyFX got out of the American market, and they went to Forex.com, which is owned by StoneX, owned out of London. Here we have the DXY. Enough of that nonsense, or that stuff. Here we have the DXY, not really going anywhere ahead of the Fed today. Fed is at 2 o'clock. We've also have some, what else have we got going on today? Well, we've got that. That's not what I was looking for. Here we are. We have the Fed funds rate at expecting a 25%, 25 basis cuts. 25% cut would create a lot of risk. A lot of risk. We won't do that. The Canadian rate is coming up soon. That's they're expecting them to hold. And the unemployment cost figures, I don't know what that's part of. It looks like it's going to be pretty much about the same. Oh well, so we have that red flag event coming up, a red folder event coming up. And she already spoke, so we're not going to talk about that. So it's kind of languishing in front of the Fed. We'll see what's going to go on with that. We are expecting a 25 basis point rate cut. I know the stock guys are freaking out right now because it's what if the Fed does blah blah blah. I'm not into spaceships and stuff. I think this is a very good indication of what's going on, or sci-fi or anything else. It's I think 89.9% is a pretty good market, because this is also, if you look real close at this, this is not just a guess. This is a contract. This is a futures contract right here. So there's a lot of money riding on whether or not they're going to cut rates or not. And so, yeah, probabilities are really good that we're going to ease or going to cut rates today. Let's see. That's going to put the USD way down here and the Canadian way down here. The Euro way up there and the Great British Pound way up there. So if we're looking for weakness in the dollar, we'll probably want to trade the GU today, the pound versus the yen. That also has cleaner setups than the euro versus the yen. But at any rate, let's get ahead out of that. It's not overcoming yesterday's bull candle, which is interesting, but I think that's just a sign of things to come. Euro versus dollar. Got kind of a possible bullish scenario taking place, but it's slamming right up against support resistance. So we'll see if that's going to do. If it's going to overcome resistance finally and get back into a bullish range. On dollar weakness, I would expect that. Pound versus the dollar versus the yen. I don't like trading against this because if I have to hold the trade, I don't like trading down. I don't like selling the dollar versus the yen because if I do that, then and I have to hold it for a few days, I'm going to lose money on the trade, and it better be right because I've got to cover the carry trade losses that I'll take for having the dollar having a bigger interest rate than the yen, and my swap fees on that are going to be not bad, not good. So my initial on dollar weakness, I would say to sell that, but at the same time, you're going to lose money on the trade unless unless you can get it out in less than 1 day, and also to make sure that you know, right, that looks more like a bullish scenario to me anyway. 'Cause it's coming right down here. Could come further down to here. Could see a buy at 156.50. Or 156.18 if it decides to overcome. But that's a strong candle from yesterday, so it's for that to offset greatly. Lately, what we've seen is the dollar going up on interest rate cuts. It's just kind of not what I would expect, but it is the dollar has been going up on dollar rate cuts. So we'll see what happens with that. So that would put this scenario to bed too. This is the pound versus the yen, pound versus the dollar again, rather. Sorry, here, make that bigger. Looks like a pullback right before a bull move to me. But again, it's pulling back to support. Kind of took off a little bit, and now it's hitting resistance again and kind of pulling back a little bit, but not really decisively. Still looks very indecisive to me. But at the same time, if we can get a doji down here like this one, that's a strong indication of a bull move. I'm on the daily charts, so maybe not. Just like that's a strong indication of a bearish move for a couple of days. Dollar versus the yen. See what's going on over here. Dollar versus the yen hit a 17-year high recently, which would be that one, I guess. So this is the trade that I don't want to say I missed that setup, but I missed that setup. Kind of starting to form a doji right now, which is very interesting. So we'll see what happens with that. That's a red doji, and that may spark a bit of a turnaround. But keep in mind, this one moves a lot faster than the dollar versus the yen. So if you're going to get into a bearish trade on the pound versus the yen, you still have the same carry trade scenario, where you're going to lose money on the trade if you have to hold it for more than 24 hours, but your moves are going to be a lot cleaner and a lot faster. That's why they call it riding the dragon. Dollar versus the yen. Again, same scenario. Euro versus the yen. This is a new one I'm going to start following. Got a little bit of a pullback in the Bollinger Bands, which is interesting. Let's see if we got the same thing in the pound versus the yen. Nope. We've got a little pullback there, which indicates it's about to make its next market move. In theory. Again, same scenario, same doji forming up here, but at the same time, we're still not getting the got a high right there. I'm not sure where that high is on the grand scheme of things. Let's go ahead and heard something that I thought was funny. When in doubt, scale out, zoom out. So yeah, that's looking pretty good. Let's go to monthly. Let's see when this was. Well, I guess that was a long time high for that one too. 172 is the pretty much. No, blew through that. 182. Has it ever been at 182 before? I'm going all the way back to 2006. There's never been to 182 before, so that's a long-term high right there. So we may want to consider that is going to continue running. The euro versus the the yen. So it's something else. Also, the learned today and doing my homework. I also recommend checking out. If you're going to do trade Forex, do your homework. Watch the other guys and see what they're doing. Not all of the other guys, so just the ones you trust. I trust Michael Boutros at Forex.com as well as James Stanley at Forex.com. And I actually interact with James Stanley on X.com a lot. Not a lot. On my days off I get to. So I'll be interacting with him shortly. If you want to watch that, that should be fun. At any rate, that is something to consider too. Another adding another cross pair to my watch list. So we'll see if we can get some action on that and make some money on that. Pound versus the Canadian. Not sure what to think about this one. That's a big sell-off right there. But how far will it go? I'm thinking it's going to come down to around here, down to 137.28. Probably break that hourly support. It already broke the daily support. If it breaks this, then it's really going to be interesting. Right now, the Canadian and the dollar or the Canadian dollar and the U.S. dollar are both the lowest trading of the crosses. Canadian versus the yen. This one's again kind of a pullback going on. That candle right there, we've got a high of 113.31. Right now it's at 113.19. 10 pips is not a lot when you're doing the yen crosses. So for the yen pairs, it's not going to. It's not really an indicator of the oil market either. There's probably some pullback in the oil market. Like, no, not really. Yeah, but not a lot to really spark panic or really big, freaking out or anything. Let's go to Aussie versus the dollar again. A lot of indecision right here, based on the Fed is what I'm thinking. But I'm not going to be concerned about that. I'm concerned more about what I'm seeing on the chart, and the chart says I'm not going to trade that. At least not right now. Maybe we'll look for an entry on a smaller time frame. But right now, that's not enough of a. That candle's not enough to kind of pull my trigger, so to speak. Gold. Gold is just hanging out at 42, around the 4,200 range. Just not really going anywhere. Just very tight range. You might want to get into a short-term buy on that. See if it goes. Maybe get $10 out of it. A $10 move out of it, maybe. Again, if we have dollar weakness, it depends on how the market perceives the rate cut, the prospective rate cut that's potentially coming at 2 o'clock, and even more so what he's going to say at 2:30. I will not be in the office then. I would love to be, but I'm not. I've got things to do too. Oh wow! Look at this. This is what I didn't expect. Silver broke out and is topping $61. Finally broke $60 an ounce. How about that? So that is a very good indication of what could happen in gold. We could see a gold breakout today. So I think we may want to get into a buy stop about here. Maybe a little bit too conservative. 42.25. Because if we have dollar weakness on that, is traditionally what you're going to get is dollar weakness. But in this scenario, I'm not quite sure how it's going to perceive that. We could have some other economic news coming out, but $61 gold silver, that is an all-time high. So it's very interesting, very very interesting. So hit 62, 61, 62. Is an all-time high for silver. So looks like we could have $100 silver in the mix soon. So with that, that's all I'm going to do today. I'm going to go down to the 4-hour range and see if I can set up some trades today while I'm in my office on my day off from my day job. Because it looks like this. If I were to just look at this. And I don't have the ability to copy that, do I? and turn that into a pitchfork, it looks like we could be ready for another wave over here. Or another takeoff spot here in the DXY. And another takeoff spot in the DXY is dollar strength. Therefore, we could have... I have to look at the silver thing and see what's going on. London miners rise on silver rally, rate cut expectations. So with a rise in silver, we should see the same rise in gold. So could be setting up a more of a very interesting. That's going to be an interesting twist to my day. The $61 silver. So let's see what happens with that. I may get into a gold trade, a bullish gold trade, based on that, because gold is more central bank oriented and silver is less central bank oriented, but at the same time, these are things to consider when picking out your trades. So it could be ready for gold to take off again. Maybe, maybe not. I don't know. We'll find out around 2:30. So you guys have a great one, and I will talk with you later. If you like this video, then by all means hit the like button. If you want to see more of these videos, then subscribe to the channel, and we'll get you you'll get notifications on when you can do so. When I put out a new video, may have some shorts coming out today because it's my day off, and I like doing shorts too. And also, if one other thing. Oh yeah, if you have any comments, by all means, feel free to comment, and I'll get back to you as soon as I can. So you guys have a great one. I'll talk to you later. Bye.